Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. Since the miner shakeout was cut in half in June, it's possible that we've reached the bottom of this shakeout. This is because July already had higher miner income than June. We can also see that the difficulty went up. The hash rate basically went up by 10% today, which means that the old miners have left the market and the new equipment is taking over. The unknown Bitcoin analyst who wrote PlanB, the Bitcoin stock tallow plan, shared a new chart showing small amounts of money coming in. The map shows small amounts of money coming in over time. It shows how much Bitcoin miners make at different points in the Bitcoin harvesting cycle and how this changes the price of Bitcoin. The former institutional trader and quant analyst shared the chart and his prediction for the top coin on July 29th. The prediction was based on small changes in revenue. A small amount of money may drop to its lowest point. I think the price of Bitcoin will double in 3 to 5 months. The tweet was liked by more than 10,000 people. PlanB says he thinks Bitcoin will be worth $140,000 by the end of the year. He said that Bitcoin would be worth $150,000 by 2024, and this backs that up. PlanB says that Bitcoin will go up even more in 2025, so $140,000 probably won't be the top of the loop. I don't agree with $140,000 at most and income going down. Based on the stock-to-flow idea, I think Bitcoin will be worth about $500 million on average between 2024 and 2028. In a new YouTube movie, PlanB talks about the miner revenue chart and his predictions for the price of Bitcoin. We'll show videos and other things. If you like this movie, please subscribe to the channel and set up post alerts to get more. Everything you do makes YouTube's system better and helps your channel grow. Thanks, and have fun with the movie. Not much money coming in, and it's very interesting right now. The blocks on the x-axis are what we see. We have halves every 210,000 blocks. Every 10 minutes, there's a block. It takes 210,000 10-minute blocks to make a year. That means it's cut in half every 4 years. In April, we had one. When Bitcoins are halved, the miners' income also cuts in half, since they were the ones who created the new Bitcoins. Also, these are just brand new Bitcoins. It's not the fees, since that's only a small part of their income. That's right, they mint new Bitcoins. But after a split, they only get half of the new Bitcoins, and their income drops overnight. This is terrible for any business, and they need to get back on track. Most of the time, small miners who have old, inefficient equipment that uses a lot of energy and lives in places where the cost of electricity is high decide to quit mining. They quit. They're losing, so they need to stop. These new miners will be the ones who can still make a profit because they have the newest and best tech that works very well and costs as little as possible, or even nothing at all. So this shakeout, every split, is a very important event that happens every 4 years and is unique to Bitcoin and the whole market for Bitcoin. Bitcoin needs to be able to handle that shakeout. That's what we're doing now. The hash rate drops all the time, making it very unstable. It's been said that miners will give up and quit, but that has never happened. It's all just false information. The important thing is that this business is growing quickly. At first, all the miners in the world made about $1 million a month. In the present day, Bitcoin miners make more than $1 billion every month. It was $2 billion at its highest point. That's cut in half to just under $1 billion. What we see now is also very interesting. The Bitcoin price needs to double in order for miners to get their money back, which is what it always did. That is, half as many new Bitcoins were added to a block. To keep the mining income the same, the price has to double. That's what we want to happen. So it's very important that we see the bottom of the mining income. From there, it will go up during the next bull market. So we see a bottom here too after 2016, and the same thing here after the half year in 2012. The bull market starts when there is a bottom and a lift. PlanB has new information and better estimates for Bitcoin by the end of the year. Tell us what you think. Also, news reports from different sources say that people were scared of a global slump on Friday, which caused the stock markets to drop more than $2 trillion. That's the most money that was lost on Friday since the peak of the COVID-19 crash in April 2020. The crash happened after the July jobs report from the Bureau of Labor Statistics came out on Friday. The study showed that hiring slowed down a lot in July. In that month, the U.S. economy only added 114,000 jobs. Experts thought that 175,000 jobs would be added in July, but only 215,000 were added. This is much less than the average of 215,000 jobs added each month over the past year. The BLS also said that in July, unemployment rose to 4.3%. That level had not been seen since October 2021. We can see that the US economy isn't as strong as we thought it would be because job postings have dropped sharply. We may be going for a recession. Now that the November elections are getting closer, investors think the Fed will cut rates even more sharply to make the long fight against inflation easier and boost the economy. Cathie Wood, founder, CDO, and CIO of ARK Invest, talks about the stock market correction, the Federal Reserve's next move, and what it all means for the U.S. economy in the months and years to come on her latest show. The well-known fund manager says the U.S. economy is already in a deep slump and is on its way to an all-at-once moment. There are a lot of different signs that show that fear is spreading through the markets. We do have an opinion, so I'd like to share it with you. The phrase slowly then all at once has been used before, but in case you haven't heard it, I'll say it again. In this case, we've been talking about the rolling recession that has been going on since the Fed began raising rates in 2022. When the Fed started to raise rates, the home market went into a recession. In the commercial real estate office, things were already bad. Now, real estate with more than one unit seems to be a problem. We've seen cars stop moving. They've kind of leveled off, but their growth rates have stopped being normal. We're seeing spending on capital goods. Consumer confidence is going down again. Housing was beginning to get better. But now it's back to where it was, at least when it comes to sales. We've been in a rolling recession, and now it looks like we're in the all-at-once phase. We think that a lot of people are starting to see that the idea that inflation is the problem might not be the right one. And prices will go down when this rolling slump is over. Based on Amazon's report last night and what I've been saying, the risk is deflation, which means prices going down. Low prices are what customers want, and they are getting them. The customer isn't breaking down yet. It's actually a reaction to some lower prices, even on cars. Still, prices going down is bad for businesses because it means their profit margins will get smaller. That's why the all-at-once has to do with signs of decline. The Purchasing Managers Index PMI came out this week, and the jobs report came out today. These are both signs of a slowdown. There are more and more people who think we're in a slump. In fact, the sum rule in the unemployment report generally showed that the unemployment rate went up by 50 basis points based on an average of the last 3 months. Compared to its low point, that set it off. This has made a lot more people think about a slump. Let's not think about anything when we say all at once like 08, 09. In fact, the part of the rolling decline that True Vision's founder and CEO, Raoul Pal, agrees with Cathie that FI should be lowering rates right now. But in one of his most recent tweets, Pal says that he thinks the Fed will stay hawkish, allow rates to be lowered more quickly in 2025. The Treasury is more likely to be able to refinance loans at 2% in 2025 if the Fed waits longer. He said that the Fed uses lagging signs, which is why rate hikes didn't happen until inflation hit its highest level in decades in 2022, and why rate cuts haven't happened yet, even though there have been warnings. Friend thinks that the Federal Reserve has always wanted to refinance bonds at the lowest rate possible, even if it meant hurting Americans. This is why it has waited to cause the most economic trouble so it doesn't have to explain its high rate. Friend gave a much-needed report on the markets, including the Bitcoin market, which he thinks is now fully in summer, in a previous Twitter chat. Here are some texts from the thread. Summer should last from 2024 to 2025. 2-year rates could hit a huge high point of 2.5%. Bitcoin is about to break